Today's webinar is, we got about an hour. I got a member webinar in about an hour from now, so we'll do this for about an hour. But today's webinar is going to be how you can start day trading the stock market today. And I'm going to give you very actionable, concrete steps so that you can get started practicing. And within, a few months, you could be trading live and you could be making money on the markets. And that's the goal. And so the goal of day trading is a little bit different than traditional swing trading or investing. It's to multiply your money really fast. Kind of like an online poker player. When they play online poker, they generally don't play one table, they're playing multiple tables. And that's because if they have an edge in playing poker, instead of just playing one table, you can only multiply that edge once. You might as well play as many tables as you can cognitively handle. And mentally, you can mentally manage successfully while keeping your edge. And day trading just takes that concept and says, hey, we're going to take that same concept, we're going to apply it to stock markets. And we're going to try and trade and multiply our edge as many times as possible and do it in a shorter time frame. And yeah, there's more trades and, day trading. I'm not going to say day trading is easy. I'm not here to tell you it's easy. It's not. Nothing really valuable in life is easy. Nothing really good in life that is going to put you to the next level is easy. And day trading is certainly that. I've definitely had to work really hard at this. I've definitely had to put a lot of time into this. And the great thing I am seeing about this is that my skills in trading Forex are really coming to the fore now. Like they're being applied and amplified in ways that they can't be in the Forex market. And we'll get into the reasons for that. So we're going to share with you some very concrete steps on how you can start day trading today. We're going to do it in about an hour. I will take breaks about every 15 minutes to answer questions. So feel free to answer your questions in the YouTube chat here, and I will answer them very periodically. So we build a rhythm, and yet at the same time, we also make progress and answer everybody's questions. So let's go ahead and jump into this. Before I do begin, we do have a disclaimer, of course. Have to do the disclaimer, got to do that legal stuff. And while I'm doing the very uninteresting disclaimer that 99.99% of you are not reading, I just want to apologize if I'm doing some sort of sniffling and sneezing. I've been having some very bad allergy attacks this week. I was supposed to do a podcast this Tuesday and I had to cancel because it was so bad. And then yesterday, I probably sneezed about 300 times yesterday. So my allergies have been pretty bad. You might even, for those of you who've heard me before, you might hear it in my voice, but I'm going to power through this and do the best that I can. So I hope you'll forgive me if I do sneeze or have to pause every now and then. So, okay, so how to start day trading today? Let's get into this. So day trading is a skill. It's designed to multiply your money fast. If I was to start day trading over with, let's say in the stock market, the PDT rule is 25,000. And so that means that if you're under 25,000, you can only make 3 day trades in a day. There are ways around that, which we'll get into. But if I was going to start it over with a $25,000 account, my goal at the end of the year would probably be about a 200% return. That would be my goal with day trading stocks. And so if I was to get, 100% return on that 25,000, I would feel good about it, but I wouldn't feel like fantastic about it. If I did a 200% return or a 300% return, that I feel pretty good about in terms of being able to multiply money fast. So this is what I'm talking about. I believe there are more opportunities in the stock market to do that than most other markets out there. So we are going to get into 3 things today, and it's going to be very, concrete, actionable steps. We're going to talk about process, plus strategy, plus stock selection. Those 3 skills, trading is a skill, and it's, like learning, to throw a football or kick a soccer ball, or for what most people call football in the rest of the world. It's a skill. And you got to learn the core skills that are the foundation of what it is to trade profitably stocks, day trade stocks. And these are really, the 3 core skills. There are mindset skills, there are risk management skills, there are analytical skills, but that I'll do in another webinar. We don't have time for that today. Today, I want to talk about the process you have to go through to build your day trading skills and how you could be day trading live money within 1 to 3 months from now. We're going to talk about stock selection. We're going to talk about strategy. And we're going to try and fit that all into 1 hour. So a lot of people don't realize, but if you think about it, If you have a $25,000 account to make a 200% return, that's 50K. You have to make 50K on your 25K. And that may seem like a lot, but if you think about it, that's actually just $200 a day. So $200 a day, 5 days a week. And if you take 2 weeks off, I generally trade 50 out of 50 weeks a year. I take 2 weeks off. And so this is just on a 50-week year, taking 2 full trading weeks off and holidays and things like that. But if you're able to just pull out a $200 a day out of the markets, you will get a 200% return on your 25K. And that's not bad. That's not bad. To take 25 and make 50 from that 25, that's not bad. That's not going to, get you retirement or anything like that. That's not going to, maybe for some people that might barely pay your bills. 50K for a year for me would not pay my bills. It wouldn't even come close. I would need many other sources of income to do that. But, for most of you, 50K in the first year is an incredible start. And keep in mind that at the end of that year one, you now have 75K. So you can, at that point, you could increase share size. And, with 75K, if you're 25K, you can do 200 a day. If at 75K, you can even do 500 or 750 a day. Now you're talking 100, 150K a year. And that's not a bad income. That's starting to get you above, it starts to get you out of the gravity of most financial situations to where if you're making about 100, 150K a year, you should be able to live a decently comfortable life. You're not going to be rich. You're not going to be retired, within 10, 20 years, but you're going to be making more than probably about 80% of the people out there, depending upon your expenses. And you're going to be in a good financial situation. And that just allows you to start scaling up into bigger and bigger shares and positions. And so with that being said, I'd like you all to answer now. And I know there's a 15-second delay here, so I apologize for that, but I want you to answer honestly and go ahead and type into the chat. What would be a realistic trading goal you would like to achieve per day? So for you, realistic, not saying like your dream, not saying what would make you feel really like rich and abundant, but what is a realistic goal for you to make every single day from the market? So go ahead and start putting your numbers. I'm going to start loading. Somebody's saying the video is a bit grainy. Really? Anyone still noticing this? Chris, the trading monster. It's awesome. Needed a refresh. Okay, so if you refresh, then the thing should be good. Ron here from Holland. Good to hear from you, Ron. I prefer stock market timing. Bad for me. I prefer stock market, but timing bad for me as I'm based in Singapore. If you're in Singapore, you actually got some good Asian markets that you can trade. You could day trade the ASX. You could day trade the, you could trade the Hang Seng. Plenty of volatility in that. You definitely got some. You got Tokyo's stock exchange, TSE. So you definitely got some exchanges that you can trade in Asia. If I was in Asia, I would be day trading the heck out of the ASX. That's a great stock exchange to trade. A lot of good day traders there. So, okay, some numbers are coming in. O'Shea is saying $100 a day. Okay, 1%, but that doesn't really mean much, Roz. So instead of thinking about 1%, come up with a dollar amount. Devin saying 500, 250, 300. So not percentage, actual dollar amounts. 500, 200 in South Africa would be great. No percentages, dollar amounts. Yanni's saying 100 euros per day is more than I make now. Okay. For start not to lose money. Okay. All right, great. So we got some. So no percentage. I said how much money, not percent. Okay, so the average here is, probably between 2 and 500. Ridwan, I'm talking about stocks today. I'm not talking about Forex. Fuad, you really need 1,000 a day? Really? You need 1,000 a day if you're like, that's a realistic goal for you right now? Are you doing that right now? Are you doing at least 500 a day from FX? So if you're doing like 500 a day, then, or from your trading, so you basically doubled a realistic goal. Okay, 350. Reddy's saying 2,000. Are we talking US dollars? Or are you talking rupees? Helps me. There's a lot of currency exchanges I got to do here, so I got to do the math on the fly. Okay, so the average amount tends to be around $2,350 a day. Okay, great. So, let's just think about that. So 200, $2,350 a day. Okay, so what would it take for you to achieve that goal? What's the difference think about this. Think about it like this. What is the difference between a $50 a day stock trader, a $500 a day stock trader, and a 5K a day stock trader? So what's the difference between that? There's two things that really differentiate these three traders between 50, 500, and 5,000 a day. Fuad says 1,000 would be just a dream. $100 would be cool. Okay, cool. I appreciate your honesty. So Reddy's saying 200. Okay. Risk management. Meh. Count size. Meh. Yes and no. I mean, there is something about that base amount. Experience. Yeah, no. Big account. Not necessarily. You don't need a big account to do that. Mindset, lot size, psychology. Okay. So the two main differences between a 50, 500, and 5,000 a day trader has to do with two things: number of shares traded and ability to find opportunities in the market. You could have two traders of equal skill with two different size accounts, and the trader with the smaller account can beat out the trader with the big account because maybe they're trading more shares, or maybe they're able to find more opportunities in the market, or maybe they're able to find opportunities that move more in the market. So that's really the main thing. And so your goal as a stock trader should be to not necessarily focus on the size of your account, but how is it that you can increase your share size, and how is it that you can find more opportunities in the market? So like instead of like a poker player playing one table, how can you play four at the same time? Most online poker players are playing about 60 hands per table per hour. So if you're just playing one table, you're playing 60 hands per hour. If you're playing four tables, that's 240 hands per hour. And so the difference, is not really account size. They're just able to play four tables at the same time. And that's the same for a stock trader. Can you find multiple opportunities in the same day? You don't need a big account to make 100 or 200 US dollars a day in the market. You don't. It can be done with, I've done it with a $6,000 account. I started off trying a very small account challenge to myself. It got very boring very fast, but just to prove to myself that I could do it, I did it. And it's not that hard to make out of a $6,000 account a couple $100 a day. That's not hard. You can do that. So just to kind of give you an idea, that really you should be focusing on number of shares traded and how many times you're trading per day, because the number of times you trade per day is what multiplies it. So $200 a day, which is what most people answered, is 200 shares at a $1 gain. If you have a $500 or $1,000 account and, you're able to trade on margin, some brokers will say 2,000, some will say 1,000, some will say 500, depends upon the broker. But let's say you have $1,000 or $2,000 account and you're thinking, how could I trade 200 shares? Well, you have a $3 stock that you can trade 200 shares on. That's $600. And if you're trading on margin, then you'll have to have 300 of your account used in margin. You only need to grab one $1 move a day to make you $200 a day. So it's not that complicated. You could do this just by one trade a day, by getting a $1 gain a day. And I think this is a great goal for traders to start off with, is just to focus on how can I gain $1 a day in terms of, hey, I'm buying a stock at 3, I'm selling it at 4. I'm buying a stock at 5, I'm selling it at 6. I'm buying a stock at 10, I'm selling it for 11. So I think $1 a day is a great goal. Now, right now, because the markets are absolutely going bananas, the stock markets right now are incredibly hot. To get $1 might be low. There are certain stocks right now that are moving from 4 to 20 in an hour. So $1 right now may seem like a low amount, but the key is that whatever's happening in the markets, sorry, those are price alerts going on. The key is that whatever's happening in the markets right now are, not going to last forever. And so what is a consistent goal that you can accomplish per day? What is, when the markets do normalize right now, in some sense, this is a retail trader's wet dream, because right now the liquidity is somewhat low. There's a lot of millennials stuck at home. They're all day trading. And the retail traders right now are actually driving huge portions of the stock market, not the large cap stocks, but the nano, micro, and small cap stocks. They are being completely dominated right now by retail traders. And you know this because when you look at time in sales, which shows you all the orders that are being transacted at what price, at what time, and how many shares, you're seeing a lot of single and double prints, single share, double share prints. That's not common, you know, to see that many. Like I could literally show you a stock and you will be kind of surprised at how many, you know, like right now, let's see, I'm looking at, let's just use a stock that I'm in right now. Or let's do another one right now. It's Ovid. So right now, and let's see if I can take a screenshot of this. Okay. Print screen real quick. This is going to pause the screen. Okay. So look at that. What do you see? Single, double. So single, single, double, double, single, double, double, single, single, double, single, double, 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 and single. So over half of the orders that you are seeing in this market right now in terms of time and sales is retail traders. And because liquidity is low and there's a lot of retail traders at home right now, a lot of people, millennials, don't have jobs or anything like that. They're looking to the market to make money. And because of that, and because of just the certain conditions right now, markets are hot. You know, stocks are moving like crazy amounts. To give you an idea, take a look at this one right here. Let's see here. Can I pull up? Let me pull up a detached chart real quick. Actually, I could just do this right here. So let's look at Ovid, a stock that we had traded yesterday. So what are you looking at? You are looking at a stock that closed the day. This blue is pre-market. This is pre-market. It closed the day at 542. By the end of the next day, it was 754. And then today it shot up just in pre-market alone in 15 minutes. It went from 778 to about $10. So you could grab these types of $1 moves in minutes. So the opportunities to multiply your money right now are very abundant. I'm not saying it's going to be easy, but they're there. So getting back to the numbers and looking at everything here, 200 shares at a $1 gain is 200 a day. 500 shares at a $1 gain is 500 a day. So for those of you that had 500, and 1,000 shares at a $1 gain is 1,000 a day. $3 stock, 1,000 shares is you'll need about 1,500 in margin. If you have above 25,000, you're a pattern day trader, then you're going to get 4 times margin. So you only need, what is that? 600, 650, maybe 700, whatever that is, 750. Yeah, you only need 750. So you could get a $1 move on 1,000 shares. There's your 1,000 a day. So this is what I'm talking about when I talk about, hey, what's the difference between a 50, a 500, and a 5,000 day trader? It's share size. And you don't need a whole lot of capital to do that, but you do need to find the opportunities in the market. Okay, so now that I've kind of talked about it, presented to you, kind of broken down like, hey, you know, let's look at the numbers. It's not as complicated as you think. Let's talk about the process, how you can get started. What's your process? What's your roadmap going forward? You know, what actions and steps can you take right now to start building these skills? Well, the first thing you're going to do is you're going to need to get a paper trading account. And ideally, you want to practice on simulator for at least a month and do at least 100 trades. 100 trades statistically is like a minimum baseline you need. And you could do that, you know, you could do sim 100 trades, you could do 100 trades in a day if you wanted to. If you're going to, you know, just crank out trades, you know, like one day, then I would, you know, keep going, but I would practice on simulator for at least a month. In terms of simulators you can use, Thinkorswim they have an on-demand simulator that you can get. It only comes with a live account, but you don't need, if I'm correct, I don't think you need to actually fund it. So you can actually get a stock trading simulator without actually funding an account. You just need to go through the process of opening the account. TradingView does have a replay function that you can use, and that will be a good way to practice on simulator. And so TradingView has that really nice replay function. Let's see here, replay. And then it's going to say, hey, you pick your time back. And so if you wanted to, trade this session, it will start you right there and literally hit play, and you can start moving you can update the speed if you want to. And you can do it really fast. You can do it, slow it down, but you can practice on simulator. TradingView. I don't know. Does anybody know if TradingView requires you to pay for that? Or does it come free? Chris is saying I made some money on Ovid. Good. I'm guessing a lot of traders made some money on Ovid yesterday. I mean, we got in at a good price. I got out a little bit early, but we got in at a really good price on that. So I think TradingView does allow you to, I think it allows you to do it without having the paid version. So that's a free simulator. It is free. Okay, cool. Oh, yep, it's free. It should be free. Raz is saying it's free. Okay. You have to pay to do the smaller time frames simulation on TradingView. I think less than D1. Okay. Okay. So you could literally pay for 1 month, 15, 20 bucks, and you need premium for replay. Okay. So yeah, 20, 30 bucks to have a full month usage of a simulator. That's a pretty good deal. So the process is sim, do it for a month, at least 100 trades, the more the better. And after you have kind of gotten some good experience on simulator the goal of trading on the simulator is to practice your skills. We're going to talk about which skills you need to practice. What are the core skills you need to practice? But it's to practice your skills to the point where they're automatic. And they're automatic if when you switch from sim to demo or demo to live, you're not freaking out. You're not like, on sim, you're like, oh, this seems easy. And then you get to demo or live and you're like, oh, I have no idea how to hit the button and this and that. Like that means it's not automatic. It's automatic if you can transition from, like a practice soccer game to an actual live soccer game, and you can still kick the ball correctly. You can still pass correctly. You can still run routes and trap the ball. That's how you know if it's a skill. If you can't trap the ball, if you can trap it in practice, but you can't do it in games, then it's probably not a skill. So you need to automate your skills. That doesn't mean that the skills are good or they're at a proficient level to make money, but they're automated enough to where you can progress to the next stage. And the next stage is demo. And demo, you can do this for as little as 1 to 3 months. And the goal is to establish that you are profitable on demo. And again, we'll get into the skills that you need to practice shortly. And then from demo, if you're profitable after that, 1 to 3 month period, I'd probably recommend 2 to 3 months. But if you're profitable, if you do it for 3 months and you're profitable at the end of 3 months, then you can go live. Because the thing about day trading is that you're going to get a lot of trades each month. You should be able to do about 100 trades. And the feedback model of doing something over and over and over and over again with the right focus, with the right mindset, with the right skills, with the progression of skills, that, will give you enough feedback to let you know, hey, do you have an edge in the markets? And if you're able to do that, then you can go live. I'm getting some questions here. So let me ask this. Chris is saying TOS on demand is not fantastic. Yeah, I've had that experience. You have to, in the settings, you have to increase the memory usage to like max level, and then it makes it faster. If you don't do that, like when you log in, there's like a settings button. If you click that, it'll ask you how much memory do you want to allocate to it. And you got to go to max memory to make on-demand work. Otherwise, it's pretty slow. But TradingView is super fast. Roz is saying, how many hours in a day should we practice on swing trading? 2 hours, no more than 2 hours. Yeah. If you are a beginner at any skill, you are learning to play piano, you're learning a martial art, You're learning a new language. The science is pretty clear. After about 2 hours, you will not progress in building your skills. It's just too much information overload. It's too much for your nervous system, too much for your brain, for your prefrontal cortex to assimilate all that information. If you are a beginner, you're learning this skill, like you're not, if you're not a profitable trader right now in stock trading, day trading, then you should only practice about 2 hours a day. So good question. Jake is saying TOS on demand is not available for me. I fund it. I have live account, but not funded. Check with them about that. So I was told, I don't know, because I just funded a live account and I just saw it available from day one. But I was told that once you have the live account, it's available. It might be maybe you have to put in 500 or something like that, but contact them about that. So 2 hours a day. I would recommend no less than 4 days a week. I would not recommend 7 in the beginning. Again, you're a beginner. It's going to take time for your brain and nervous system to assimilate all this information and, you know, the speed of processing and everything like that. So I'd probably recommend in the beginning for the first month about 4 or 5 days a week. I think once you get really, really good and you've like a lot of your skills are automatic, then you can start moving to, you know, 6 days a week. And only when you're really skilled can you start doing 7. But after a certain point, there's diminishing returns because it's just too much for your nervous system. So need to take rest days too. Yeah, a couple days a week would be good. Okay, so now you have a roadmap. You have a roadmap, you have a process. Let's start to get into the skills. So, Johnny will get into that question shortly. So the skills you're going to practice on sim, these are the 3 skills you're going to practice. You're going to practice your pre-market analysis skills, which we'll talk about. And, well, I'll say something about that in a little bit. The opening drive, which is the market open. So that's usually anywhere from market open to about the first 2 hours. Generally, I get the majority of my day trades done in the first 2.5, 3 hours, and then I'm generally done for the day. There might be some stocks that are just moving heavy throughout the day. There's going to be a lull probably in the middle of the day, and then, you know, towards the end of the day, you may get a push. But, you know, this is my full-time job. This is what I do. So for me being here for the full session, it's what I do. For most of you, you probably have a job or something like that. You only have a couple hours, then make sure you catch 30 minutes before the market opens. That's your pre-market analysis time, up through the next hour and a half. If you can only do an hour, then get there about 15 minutes before the market opens and then trade the first 45 minutes. So ideally, you can get about 2 hours in. The more, the better, but ideally, you can get about 2 hours in. Okay, so pre-market analysis, opening drive, and then your technical skills are going to be price action, volume, and VWAP. You need to think of those in terms of your chart reading skills. You need to think of those as like one unit. But in the beginning, it's not going to be one unit. So you're going to practice price action individually. You're going to practice reading volume individually, and you're going to practice understanding VWAP individually. We do have videos on all of those in our YouTube channel, so we can share some of those. Ashish will get in that as well. But these are the skills you're going to practice, basically. Now, pre-market analysis, you're not going to actually be able to build that on a simulator per se, because there are certain things that won't be available on a simulator. So that could kind of be like on a demo, basically, but you can still practice that on the live market right now. So you could practice pre-market analysis. And I'm going to share with you my pre-market analysis routine that you can practice. It's pretty straightforward. Opening drive, you can practice on simulator for sure. And price action, volume, and VWAP, you can practice all those on simulator. Demo is the same thing. You're just now doing it with a live market feed, basically live price movements and fake money. Okay, so this is your day trading process for sim and demo. And live is only once you've established yourself. Now, we talked about 3 things. We're going to talk about process, stock selection, and strategies. And so stock selection, believe it or not, is probably the most underrated skill and is actually probably one of the most important skills. You could be a really good technical trader. You could be really good at reading the price action. I have a lot of students that are very good at reading the price action. They could understand volume and VWAP, but if they don't select the best stocks, then they're going to select stocks that maybe they fulfill a technical requirement. Maybe they look like a great setup according to your strategy, but you take the trade and it just doesn't move. And you're like, what happened? It just doesn't do anything. Doesn't go anywhere. That comes down to stock selection. If you're day trading, you're only in for a short period of time that day. And so you need to select the best stocks. You need to select the stocks that are move. I often see we have a live trading channel for our members in our stock trading course. They can trade with me live. They can see all my trades. I share with them all my trades that I make that day, whether it's stock or option trades, I share all of it. And it's all in our member trading channel. And I often, when I have a lull between my trades or something like that, or I'm just kind of riding a trend out or something like that, I often, sometimes I'm like, hey, what are my students seeing? Because sometimes they find some really good setups. Like sometimes I'm like, oh, that's a good one. And then I pull up the chart and I'm like, oh yeah. And then I get it. So I often see them pick certain trades that fit the strategy requirement, but they're not trading a stock that's in play. A stock that's in play is a stock that is being heavily traded that day. If it's not being heavily traded, the breakout's just not going to work. If it's not something that's a stock in play, then it's just not going to move. It may fulfill the requirement, but they get in the trade and it just doesn't go anywhere. So they got to exit position by the end of the day. Okay, well, you just wasted your money and time on something that is not a stock in play. This is probably one of the most underrated skills is stock selection. And so stock selection requires some technical skills, but it also requires pre-market analysis skills. Now, in terms of types of stocks to trade, I'm assuming most of you are under a 250K account. And so if you're less than a 250K account, you should be trading stocks that are priced between $3 and $45, depending upon where you are in that size account. Obviously, the smaller the account is, the smaller the share size you should be trading. If you're below, a $5,000 account, I'd probably be trading stocks between, $3 and $10. If you have more than that, then you can start moving into like, $10 to $20 range. And if you're above, the pattern day trading rule above 25K, then you can start looking at stocks that are, $20, $30, $40. There's some really good stocks at that, and they have great liquidity. And it's kind of like a nice balance between large caps have tremendous liquidity, small caps have tremendous volatility, mid caps have volatility and liquidity. So it's a nice kind of mid-range balance between the two. But my recommendation is trading micro to small to mid cap. So stocks that have valuations of 50 million and up. Now, you got to understand that the greater the price of that stock, so the higher you go up from 3 to 45, the greater the liquidity, which means that, there is liquidity matters. There's certain times you're just not going to get filled. Certain times you won't even be able to short a stock. It'll be classified as NTB or HTB. NTB is not available to borrow. HTB is hard to borrow, which means that it's hard to borrow the shares to short them. That's one of the disadvantages. With Forex, you don't have that. There are ways around that, which we'll get into more advanced, stuff later. But as you go up in price, you go up in liquidity generally. The thing is that as you go up in price, volatility percent returns per day go down. So the key is to find a sweet spot between something that's going to move 10, 20, 30, 100, 200%. Right now, certain stocks are moving 100, 200, 500, 800%, like some insane movements. That's why the market's hot right now. So you need to find something that's going to move, but is also going to have enough liquidity that you're going to get filled. Things that have low liquidity, sometimes I see these spreads and they're just like 20 cents, 70 cents. And I'm like, what the F? Like, I can't trade that, I can't come in size with a 70-cent spread. So you have to find that balance. And I think the $3 to $45 range does that. So stock selection, this is kind of, as I mentioned, this is kind of the ace in the hole. In terms of stocks that I choose, I generally look at stocks that are 500,000 shares and above being traded in terms of volume. So the volume is 500,000 shares or more. If it's in the 1 million plus, it's better. The majority of my stocks now tend to be, hey, I'm looking for 1 million shares or more because I know that there's going to be liquidity and movement when I get to that share level. So stock selection, very important. You could have a technical setup that meets a breakout, but maybe it's only trading 100 or 200,000 shares. the chances of that, making or pushing a massive breakout are slim. So you need the volume to do that. This is why stock selection is very, very important. And the other thing is you have to look at today's volume in relationship to average daily volume. TradingView has a great little stat that they will show you. Here's today's volume. Here's average daily volume. So today's volume is 2 times the average daily volume. Okay, that's a stock that's in play. That's going to move heavily up or down. That's very, very important. Spotify, big mover lately. Right now, volume 3.7 million, average volume 2.7 million. So it's above average daily volume. It's going to move. It's a stock in play. So you can't just look for, hey, it's got 500,000 shares. I'm good. Yeah, maybe it's got 500,000 shares on today's volume, but maybe its average daily volume is 8 million. So, or 10 million. So what, you're, 5% of your average daily volume? That's not necessarily a stock in play. So it's important to be picking stocks that have good minimum volume and also have good volume in relationship to average daily volume. This is super important. I'll get to some questions in just a second here. So I generally won't touch a stock unless it's up 10 to 30% in pre-market, because if it's up 10 to 30% in pre-market, that tells me there's a lot of institutional interest and there's a lot of people that are looking to get into this stock before it opens. And if there's a lot of, gains pre-market, it also means it's going to gap up once the market opens. And that creates opportunities. If it doesn't gap, if there's no pre-market movement, then the stock's not in play. So 10 to 30% tells me, hey, this stock is being engaged and it's a potential stock in play. Most of the time, I prefer a positive news catalyst, but that is not always going to happen. So this is kind of like the bonus cherry on top. If it has it, all the better, but you don't need it. It's just one of those that if it's there, it's that much better. If it doesn't have that, but it has all the other requirements, then I will consider trading it. And then the last, key to selecting my stocks is the price action plus the volume is super important. That will tell me if the stock is in play. Okay, so let's get to some questions. Johnny Enright says, where do you get your ideas on which stocks to trade? You just pick based on what's in the charts. So I think I've just answered that, Johnny. I'll get into some more about how I select my stocks, but yes, I have stock screeners. TradingView has a stock screener, which I've talked about before. So you have the stock screener here, and I have an opening gap one. And so this will literally tell me, so last above or equal 3. So any stock that is above $3. Gap, I'm looking for something that gaps 5% or more. Percent change tells me how much percent change is in that stock. Volume, 50,000 to 1 million. This is just kind of on the low end, but I should probably be upping this to more like 250, 500K. Okay. And then market cap. That's kind of that range I was telling you, less than 50 million up to 2 billion. Should be actually, there we go. Should be 50 million, 2 billion. And then it'll filter out stocks for me. Now it's Friday, so volume is less. There aren't going to be as many that fulfill this. But what do I see? I see 9 stocks, and I'm looking for something that has a gap up by a certain percent and the change is higher. If it gaps up by 15%, but then the change is like minus 10%, then that means it gapped up and it's sold off and it's lost all those gains. But if it gaps up and the percent change is even higher, then that means it's a gap and go. It's running from the gap. So I click on that and it'll give me the chart. Hey, this is up. It tells me basically from here to here, it's up. What was the percent? Pre-market, it was up 18%. And look at it. I mean, nice runner from 17 to 20. It's a $3 move. You caught it your dollar, you're done for your day. You hit your fulfillment goal. Average volume. This also fulfills the volume requirement. Now it's at 2 million right now. We're only an hour into the session. Average daily volume is 300. So it's about 6-7 times average daily volume. That tells me the stock is in play. So that's what I do. I literally just go through the list. I click on all the charts. I look at the price action super quick. I, look through the numbers and I'm like, okay, this fulfills the requirement. And then I put it on my list. And what I do is I just create a tab for every stock that I'm watching. I always keep the RUT because the RUT is the index for the small caps. It tells me whether the small caps are more likely to have upward pressure or downward pressure. If the RUT is up, it will have upward pressure. If the RUT is down, it will often put downward pressure on that stock. And so I do have that up, but I literally just put up tabs for every stock that I want to watch. I also have Benzinga Pro. This is a paid thing. This is free. This is paid. And they have a really good list of stocks. They don't have as many filters right now, but it will tell me percent change, previous close change, and it will tell me volume. So I'll have an idea of volume in relationship to average volume. This is, 5-6 times. So here I can click on the chart. I can click on the stock. It gives me a chart. It allows me to look at it and be like, oh, okay, that's interesting. And then I look at it on my TradingView charts. SHLL, another one here. So very big pre-market move, 1297 all the way up to 17. You just got to capture $1 of that. So that's how I do my stock selection. You seem to need some ginger tea. Yes, I do. I definitely do. I'll get some tea before the next webinar. Does this stock selection apply other than the US like UK? Yes, it does. You'll have to change it a little bit because stock valuations are different in the UK. Volumes are different. You would just have to kind of scale it basically. I don't trade the UK market, so I wouldn't know how to scale it, but you'd have to scale it based on that. Chris is saying, will this be recorded? Yes, it's being recorded by YouTube. How did you get your screen like that? I don't know what you mean. Do you mean my charts, Devin? In your TradingView background, blue color meaning is the session over. The blue is pre-market. The blue is pre-market. So I think you go into settings and extended hours, basically. You have to check this. Intraday only. So that's only for intraday timeframes. Michelle, on risk management, trading shares, if I buy 200 shares for $3 per share, 600 in total, that's actually, because you'd be trading on margin, it'll be about 300. That's your margin. Am I not risking too much on a 2K account? You're not risking 600. That's just your margin. That's just your margin, Michelle. If you buy 200 shares at $3 stock, you're going to have a stop loss. That's just your margin, and you're only going to have 300 in margin. So if you had a 50-cent stop on your $3 stock purchase, then that would be $100. So yeah, hopefully that clarifies it. I only trade CFDs, so not much knowledge on shares yet. Okay, gotcha. Yeah, CFDs is slightly different. You get more leverage in CFDs. You can short. You don't have to worry about liquidity because it's not an it's an actual contract. It's not an actual shares available. This is valuable information. Can't wait to get in stocks once I feel comfortable in Forex. Cool. Glad to hear. Any advice on how to build a trading strategy? We're going to talk about that. Daubert, yes and no. There's more to it though. But yes, as long as you have those down, you'll be in good shape. There's more to that. Okay, so we got about 20 minutes that I got to move this along. So day trading strategies, there are, and I recommend practicing all three. There are generally 3 day trading approaches you can have. You can do scalping, which is 20 to 50 cent moves. And as you can see through a lot of these stocks, that is not hard to find. Just pre-market, this moved almost, what is that, $2? So you're just looking for 20, 50 cent moves. This one, classic example here. Those of you in my price action course will recognize the breakout setup, but you're talking from 17 to 91083. You're just looking for 20, 50 cent moves. So you're looking from like here to here or from here to here. That's what you're looking for. That's scalping. And you're looking to do that multiple times. If you're scalping, you generally are probably going to make, 10 to 20 trades plus a day. You're trying to catch, 1 minute and 5 minute moves. Right now the market is really hot. A 5 minute candle can move 50 cents, no problem. So you could be in and out in 5 minutes. You could be in and out in 1 minute. The markets are really hot right now. So scalping is 20 and 50 cent moves, and you're trying to, 10, 20, you can do 50 trades in a day easily. Just depends on that. There's short-term day trading, which is basically you're looking for $1 and $3 moves. you are basically, if we go back to the charts, you are trying to, let's look at Ovid. That was one yesterday. There we go. So short-term swing trading is you're basically trying to capture a majority of this move, and after a certain part of the pullback, you're going to get out. But you're capturing a move from like 6 till 7. So you're capturing your $1 in that one swing. You're in the position for about an hour, 2 hours. Maybe you catch a second swing, but you're trying to catch, just these general swings. Once you get to your $1 to $2, $3 and price gains, then you're generally changing or you're getting out of the position. Swing day trading is you are trading from the opening drive from when the market opens, and you're holding to take profit, stop loss, or end of day. So you are basically riding the trend for that day. You're trying to call the trend for that day. And so if we go back to the Ovid chart, if you could capture the majority of this opening drive, at the end of the day, you bought it roughly 6, you're out at 737. So you're closing, you either letting it hit your take profit, you are letting it hit your stop loss, or you're closing at the end of the day. Maybe you had a stop loss a little bit higher, you didn't get there, but hey, we made, $1.25, $1.50 at the end of the day. Hey, I'm going to close at the end of the day. There's really no trade management involved in short-term swing trading. You're basically day trading, but swing trading style. And you're just holding for that. And that might be easier for some people because maybe they can, pick their stock at the opening drive and they believe, hey, I can call the overall direction. I believe at the end of the day, this is going to close up. I don't know how much. I'm going to set a target. I'm going to set a stop loss, but I believe I can call the direction. And then you don't have to check in with it until the end of the day. Get in 10, 20, 30 minutes before the market closes. You could even do it by phone. Could click, close out. I'm done. That's the least labor intensive of all the strategies. I recommend practicing all 3 until you find your niche. Some people are going to be really good scalpers and they're going to suck at swing day trading. Some people are going to be really good short-term day traders where they'll catch their $1, $2, $3 moves. But some people, won't. Some people will just be, hey, I'm only good at, scalping, or I'm only good at holding till the end of the day, or until it hits my stop loss to take profit. Practice all 3 until you start to feel like, hey, the numbers start to show like you performing way better in one, and that one feels the best to you. For me, I tend to do better in these 2 regions. I also do have some swing trades that'll hold maybe for a few days, maybe a week or 2. Like DKNG, that was a stock that I started buying and accumulating at 26, 27, 28. We showed it in a live video that we had bought at 26, 27, 28. And DKNG right now is at like 41. And we still have many of the shares left. So, it's a massive move. So I tend to do the majority of my day trades are in this. I do have, if I was to take 100 day trades, probably 80 of them are going to be this, maybe 85. And then I have some that I'll just hold till the end of the day and close out. But then I probably have another 5, 10% of my trades that I will hold for 1, 2, 3 weeks to catch those kind of multi-day runners. So this is super important. Okay, a few questions and then we're going to move on. Actually, one question. Ashish Jadev, what are the key things to focus on before pulling the trigger? So I've already mentioned a lot of those: pre-market analysis, stock selection, price action, volume, and VWAP. You can't think of it as like a candlestick pattern or this and that. You have to think of it as that is what helps you select the best stocks. My recommendation for y'all is to practice this one strategy. This one strategy happens across hundreds of stocks every single day. So you should be able to find up a setup, assuming not, that all the stocks aren't tanking, but if all the stocks are going up, or there are stocks that are going up, you should be able to find several of these a day. So it's a breakout strategy. I have a video on that. Give me a second. I should probably do it this way. Give me a second. I'll show you the pattern, and I'll show you the article to that. Not co. Okay. Videos. Probably. Okay, we're close. There we go. This video, I'll share the link in the chat. Learn this pattern inside and out. Learn this pattern inside and out. This is a great breakout pattern. This happens a lot, and I mean a lot in the stock market. So DKNG. Actually, let's just go to Spotify, one of the big ones lately. So you should be able to see this pattern. Let me go to a 1 hour chart. This right here is the breakout pattern. It does have a precursor to it, impulsive move into a corrective structure. But when you watch this video, it will tell you saying, look, there's certain signs that you're starting to get, particularly right here, that the market is breaking out. You want to learn this pattern inside and out. You will see this dozens of times a day. Had you bought even 10 shares of Spotify, you would be up, was it $430 right now? DKNG on the 5-minute chart had like 3 of them within the same day. So let's go to the 5-minute chart. It was just doing it again and again and again. So we've been long since 26. I can't scroll that far back. We bought again somewhere around here. It was basically corrective structure, bull flag, impulsive move, corrective structure, bull flag. We bought the breakout. We are still holding those shares. But within that 5-minute time frame, you can actually see this pattern a couple times. Okay, here it is. Let's get rid of this line here. I'll give you some more filters in a second, but here was the first one. I think we did about 800 shares on DKNG this day, and we did really well. So here's the breakout pattern. I generally take the breakout, but you can capture the breakout pullback. There was even a larger one here that followed it up. So you could have bought multiple times along the way. There was this one. I scalped that for a little bit. You can see the breakout pattern inside of here, which you could have scalped for about 80 cents. But you will see this pattern. Watch this video. Let's get that link. Watch this video and learn this pattern over and over and over. Yeah, learn this pattern over and over and over and over again. Now, you can't just trade the pattern in and of itself. That's where stock selection comes in if you use the filters. But in terms of additional filters, so we've talked about volume requirements. We've talked about, it has to be moving pre-market. If you look at, this is the volume bars right here. You see massive volume surges at the open. So the stock is in play. So you need the price action, the volume, and the other requirement is VWAP. It has to be above VWAP at that time. If it's not above VWAP, then I generally won't trade a breakout. I won't trade an upward breakout below VWAP. There may be a few conditions that I will consider it, but most likely I'm not going to. Another one that did it yesterday was ALPN. We did this one yesterday. Is this ALPN? APLN maybe. Exchange agreement. What was does anybody remember? I'll check here in a second. Hold on, I'm checking with the channel. ALPN. Okay, so that should be ALPN. What am I missing here? Halted due to volatility. Where was the long trade? Wow, I feel like I'm looking at, oh, that's why. I was like, what the fuck? Okay, yeah. This is one we did yesterday, bought at 972, so right about here. And we closed it out for almost $1. But you can actually see the breakout pattern here. And you can even see the market came right back to it and test it. That was one of the few times that, I'll do a breakout trade below it. But you need to learn this pattern over and over and over again. In your breakout video, it's the 20 MA. I would assume you would, for stocks, you replace VWAP with it. Yes. ALPN was a big one yesterday. Yes, it was. Yes, it was. Okay. Question. For someone under PDT rule, what would be your advice for the trading strategies? So pick your 3 best day trades for the week, trade those, make sure they have all the cherries in terms of requirements, and then trade those. And then I would suggest doing holding for 1 day. So you find a really good, after you've done your 3 day trades, you're under the PDT rule. For those of you who don't know what the PDT rule is, you're below $25,000. You can only make 3 day trades every 5 business days, and it's a rolling period. Your broker platform should tell you whether you have day trades left or not. Thinkorswim does do that. It even has a counter when you're above the PDT rule. It's kind of weird, but anyways, so what I recommend is finding stocks that have the potential for multi-day runners. So you can find a stock that has all the good volume requirements, all the good, price action requirements. It has the VWAP filter and all that stuff. You buy it early in the session, you hold it till the next session. You can actually close that trade pre-market before the session opens. And it won't be subjected to a PDT rule, because once you hold it overnight, that thing is no longer classified as a day trade. So I'd recommend then finding trades that have the potential to go for multi-day runners. If you can find trades like DKNG that's just gone for runner after runner after runner, or the XME trade that we did. We had the XME trade that went for a multi-day runner, like DKNG. Like, again, we bought, 26, 27, 28, 30. We bought multiple times along the way. We still have a lot of shares in it. Look for trades that can go for these multi-day runners. So that would be huge. In this case, you'd want to do trades probably on the 1 hour chart and make sure it's above the weekly VWAP. So that would be a good filter. Another one that we did a couple weeks ago was XME. This one you want to try and catch these little multi-day runners. Maybe it's a week or two, but we caught, it got within like 10 cents of our target. This was our first breakout trade. We did another breakout trade. I think I even did a video on this. This is the same pattern. You need to learn this pattern over and over and over again. We added, here's your $1.50 move right there. So look for trades that can do multi-day runners. To capture a multi-day runner, you're generally looking for something that's going to have a breakout on a 1 hour chart. 5-minute breakouts may or may not produce a multi-day runner. But if the 5-minute breakout is also supported by the 1 hour chart, then that tends to lead to multi-day runners. So Spotify had one on the 1 hour chart. This is the same breakout structure, and this has just been a monster. So hopefully answers your question. Okay. So let's see here. I've given you a strategy. If I could only trade one strategy, that would probably be it. There are other individual strategies you can learn. There's definitely a lot. We teach a lot in our stock trading course, but I would recommend learning that strategy inside and out. You're going to find trade setup after trade setup every single day. My only kind of qualifier around that is always be cautious around breakouts on Fridays. I generally don't like to trade breakouts on Fridays because you got to remember all the liquidity is sapping out of the market that day. By the time the US opens, London's already starting to close. So I generally am not a breakout trader on Fridays. I may add positions. Generally use Fridays to add option plays or swing trades that I like that I want to hold for a couple weeks or something like that. I don't do a whole lot of day trading on Friday. Maybe, I get 1 or 2 trades in there or something like that. But, because I have the webinars at 8 a.m., I generally don't have time to get ready, do all the day trades, and then manage everything and close out before the webinar. So, I usually do mostly option and swing plays on Fridays. So avoid breakouts on Fridays. Monday through Thursday is generally your breakout trades. She says, I have started to realize I just need to focus on only price at critical levels. I don't know if I totally buy that. I don't know if I totally buy that. I think that's important. I would put that under the necessary but not sufficient. Like in and of itself, it's not sufficient. Because if you do that, you're going to miss so many trades. Like, that DKNG, the DKNG breakouts that were happening, those weren't at major levels. The the 5-minute breakouts that we had, a lot of these breakouts weren't at major levels. This one wasn't at a major level. This one was above a major level. This one was in between 2 levels. So yeah, I wouldn't remember you're day trading. You're trying to catch momentum for that day. And momentum doesn't necessarily have to occur at levels. Momentum is momentum. It occurs where it occurs. So yeah. So I don't totally agree with that. I think it's necessary but not sufficient. Okay, should we do set, forget, or managing? For your 3-day trades, you should probably in the beginning set and forget, and then eventually you can move to managing. Once the great thing about day trading is you'll get your 100 trades in no time, 1 month, 2 months, 3 months. And once we can show that you have a statistical edge, then we can start doing managing. But you shouldn't be managing trades until you can stick to the trading plan. And so that's why you start with set and forget. So yeah. Okay, last 2 questions, and then I got to wrap it up because I got another webinar with private members right now. I'm in Holland, so I can trade US and European stocks. In my idea, NYSE are a lot more volatile. What is your opinion on this? NASDAQ, very volatile as well. Yeah, NASDAQ is very, very volatile. So I would try and trade as many US exchange. If you can trade the US, that's, there's 30,000 stocks. You should be able to find stock trades every single day. But I would definitely trade NASDAQ as well. Stefano says, I still didn't get the PDT rule is applied to everyone. Everyone trading US stocks and a US brokerage, regardless of residence. Yes. As far as I understand it, yes. Okay, so with that being said, I got to wrap it up. I got another webinar here for you. For those of you who want to trade live with me, the US stock market session, Monday through Thursday, I'm there about 30, sometimes even 40 minutes before pre-market. I go through my analysis and then I say, hey, these are the ones I'm looking at. These are the top of my watch list. And then if I make any live day trades that day, I share all of it. Hey, I'm long such and such price. Here's my stop loss. Here's what I'm gunning for. All of it. All of it. So if you want to do that, you can check us out at our stock trading course at Second Skies Trading, which you can check that out. And we're doing a coupon code till the end of the month. It's a weird coupon code. I'm putting it in the chat right now. That will get you 20% off that course. So if you want to do that, this is your time to take advantage of it. Also, starting next week, I believe, we are going to be doing every Wednesday. We are going to be doing every Wednesday or every Tuesday. I'm going to do a pre-market analysis with you. So I'm going to walk you through my stock selection process for that day. So I will be there about 30 minutes before the market open, maybe 35, 40 minutes. And we'll probably do it up till, 2 minutes before market opens. So I will, hey, here's my watch list. Here's the stocks. Here's how I select. Here's the price section. Here's how I'm looking in volume. And then after that, I have to, shut off because I got to do my trading and things like that with my members. So, but I will start doing that every Tuesday. So every Tuesday here on YouTube, come back for the US market open about 30 minutes before the US market open. And we will do about 30 minutes of pre-market analysis live. Maybe I'll do some day trades if the pre-market is good. It's a little sketchy in pre-market. So, I don't like to go in unless there's liquidity and it's always questionable, but yeah. So come back every Tuesday and we will do pre-market analysis live and you will see my stock selection, how I choose my stocks every Tuesday. So with that being said, I hope you enjoyed this webinar. I hope you found it interesting. I hope you got some actionable items on it. Good luck trading. Have a great weekend. I hope to see you in the stock trading course, trading live with myself. And there's a lot of members here. We are very active every single day. A lot of trade ideas, are flying every single day. So I hope to see you there. Other than that, I'm going to do a webinar for my members right now. So have a great weekend. Stay green, stay positive, and I will see you next time. Take care, everyone.